Welcome everybody, and in today's lecture we'll discuss about advanced tax. Now what is advanced tax? What is its implication? Everything we'll try to understand in this lecture. Okay? So listen to the video till the end and you'll get full clarity about all the provisions in relation to the advanced tax. Okay. Generally what happens is you earn income in the previous year, correct? Suppose for our exams 2022-23 is the previous year. You earn income in 2022-23, and in relation to that income you pay tax in the assessment year. You pay tax in the assessment year. Okay, so in the previous year you earn income, and in the assessment year you pay the tax. That's it. Clear to all of you? No doubt should be there in your mind. Now let's continue with the discussion. So what I said, that generally we earn income in the previous year. For that we pay tax in the assessment year. This was quite normal till many years. But then what people started doing is try to escape taxes, don't pay tax on time, delay the payment of taxes. So all these things happened, and it was creating a problem to the income tax department, because ultimately income tax department has to pay the salaries to their employees, they have to run their administrative expenses, pay their rents. So throughout the year they will be spending lot of money, and if the taxpayer who has to pay tax at the end of the year, right, you earn income in the previous year and you pay tax in assessment year, if you don't pay, then automatically income tax department will face problems. Not only that, government will also face problem. Another challenge was the collection of taxes was becoming difficult. Then lot of different ideas came into force. Finally, TDS, tax deducted at source, TCS, tax collected at source, and advance tax. These three ways government launched, introduced, and from that they started collecting tax way in advance, right? So now government is not waiting till the assessment year, like 2022-23 is your previous year. So in 2023-24 you will pay tax to government. Government don't want that. Government wants the tax should be collected way in advance, or in simple language, as you earn money so you pay taxes. This is simple, right? As you earn money so you pay taxes. This was the funda which government finally fixed. Now one way is advance tax. Okay, now you know how much income you are going to earn, so you calculate your income, estimated income you calculate, accordingly you calculate tax, right? And you pay that tax in advance from time to time. So this is what government said, and for that proper rules, proper regulations, right, should be there, and for that purpose this chapter is there. So let's start what this chapter talks about. This chapter says that advance tax is applicable to all assessees. So whether it is individual, HUF, company, partnership, doesn't make any difference. Are you a resident or non-resident, doesn't make any difference. Are you a citizen or non-citizen, doesn't make any difference. Clear? To all assessees, irrespective of residential status, irrespective of the type of person you are, irrespective of your citizenship, advance tax provisions are applicable to you. Okay, but government said one thing, that let us calculate your advance tax. If that advance tax is equal to or more than 10,000 rupees, equal to or more than 10,000 rupees, then definitely advance tax should be paid to the government. If suppose your advance tax liability comes to be 4,000 rupees, then government says no problem, you pay in the next year, that is assessment year only, no problem at all. If your advance tax comes to be 6,000, 7,000, you pay in the assessment year, no problem at all. But if it is 10,000, 11,000, 20,000, lakh, crore, then government says, sorry, we can't wait till next year. Come on, you pay in advance. This is what the whole concept is. Clear? Now you may ask me a question, sir, okay, but how will we know our income and how will we calculate tax? Because throughout the year when we conduct all the activities, whether it is business, whether it is investment in stock markets, anything as such, then at the year end we will understand the income. And that's why government also said that you pay tax in assessment year. But now government is saying that you calculate income in advance. Is it possible? The answer is yes. Hey, because you have certain history, correct? Whatever you earned in the last year, before that year, you know. Accordingly, you will earn in the current year also. So you estimate your gross total income. What you should do? Estimate your gross total income. From that, you deduct. From that, what you need to deduct? Deduct. From that, what you need to deduct? Come on, tell me. From that, you have to deduct deductions under chapter 6a. VI means 6, Roman number. Okay. A is A. These are deductions under chapter 80C to 80U, chapter 6a. So wherever you are doing certain investments, certain expenditures, you can claim the deductions. That also you can have a rough plan of yours, correct? So this way, estimated gross total income you will take. From that you will deduct deductions under chapter 6a, that is 80C to 80U. Then you will get the total income. This is also estimated only. Okay, right. Estimated total income you will get. From this estimated total income, you calculate your estimated tax. Now you have estimated income, right? So you can calculate estimated tax based on the applicable sections, right? Whatever the current prevailing tax rates. So accordingly, you estimate the tax. From that tax, you have to deduct rebate under 87A. Deduct it, no problem. If surcharge is applicable, then add the surcharge also. Then after adding surcharge, you can even add health and education cess. You have to add, okay, at the rate 4%. Once you add, your total tax liability comes. From this total tax liability, you will deduct already the TDS and TCS. TDS means tax deducted at source. TCS means tax collected at source. Okay, this will be given in the questions. You will deduct it. There is a separate chapter for this. What is TDS, right? Nearly 5 to 6 hours I will be teaching that. There we will understand everything. TCS, a small 40 minutes lecture is there. There also you will understand everything. So you will deduct the TDS, TCS, right? Once you deduct from the total tax liability, the TDS, the TCS, then finally you will get advance tax liability. Okay. If this advance tax liability more than 10,000 or exactly 10,000, then you have to pay advance tax to the government. Shall I tell you in a very simple language? Advance tax is the tax paid to government for the previous year's income in the previous year itself. Now, not written anywhere in my notes, but just for you to understand. Like our previous year is 2022-23. So for 2022-23, if you pay any tax, in 2022-23 itself. This is called as advance tax. That means from 1st April 2022 till 31st March 2022, sorry, 23, from 2022 1st April to 31st March 2023 31st March, you will pay the tax, and this is called as advance tax. Clear to all of you? Yes or no? Very good. Till now everything is clear to you, how everything is done. Okay, computation is clear to all of you. So now let me tell you certain things. Till 31st March of the previous year, if you pay any tax, that will be treated as advance tax. 31st March of the previous year. So our previous year 2022-23, right? So till 31st March 2023. Okay, in the notes, first point over. See the second point, what it says. Suppose you are a senior citizen above 60 years. Now if you are a super senior citizen above 80 years, you have all the incomes but no business income. You may be earning interest, dividend from companies, right? You may be earning some capital gains, you may be earning some house property rent, you may be earning salary, all that are there, no problem. Okay, but no PGBP. If no business income to senior citizen or super senior citizens, then government says, okay yaar, we will relieve you from advance tax provisions. So to senior citizens and super senior citizens, advance tax provisions will not apply if no PGBP income. Point number 2 clear? But sir, at the start of the year you are telling that we should know what is the advance tax. How actually it is possible? Estimating it is okay, but how to estimate? We sometimes capital gain incomes are there, sometimes dividend incomes are there. How to estimate? Practically difficult, right? So what the government said, that okay, this type of income suddenly come, I can understand. Hey, we'll also discuss the due dates. Wait a minute. Okay, now suddenly this dividend income comes, suddenly this capital gain income comes, suddenly this lottery income comes, and at the start of the year you don't know all these things. So government said no problem. When you realize that, when that income is accrued, in the next advance tax installment you pay what's there in it. Or if there is no installment left, because you can see in this page itself, 15th March is the last day, last installment. Okay, so if you, there is no installment left, then what will you do? Then you pay at least till 31st March. That's enough. Okay, if you pay till 31st March 2023, it is deemed, it is assumed that you have complied with the provisions. Okay, now what are the due dates of advance tax? I skipped actually. Okay, we discussed so many points, but that point I skipped. So let's continue. So if you are an assessee covered under the presumptive taxation under section 44 AD 44 ADA, then you need not pay advance tax in installments. You simply pay advance tax on 31st, sorry, 15th March. How much? 100% of the advance tax. So what they say, are you an assessee covered under 44 AD 44 ADA? If yes, you are covered under 44 AD 44 ADA. If the answer is yes, then what to do? Then you have to pay advance tax only one time in the previous year. What is it? Suppose our previous year is 2022-23. 15th March 2023 is the due date. Till that time, you should pay 100% of the advance tax. That's enough for 44 AD, 44 ADA assessees. Now, come to the next part. Suppose you are not a assessee who is covered under presumptive taxation. you are not an assessee covered under presumptive taxation. Then you are covered under all other provisions of income tax. So for you, you should pay advance tax in four installments. How many installments, my dear? 4 installments. First installment is due on 15th June of the previous year. So for our exams, 15th June 2022. Okay. How much you should pay? Up to 15%. Suppose your advance tax liability is 1 lakh rupees. Up to 15% means up to 15,000 rupees you should pay. Up to how much you should pay? 15,000 rupees you should pay. Okay, right, very good. Now, what is the next thing to remember? Suppose till 15th September 2022, they said up to 45% of the advance tax liability. That means already 15% paid, right? So if you add to that 15, 30, then it will come to 45. So if you paid up to 45%, that's enough. Suppose 1 lakh is the case of advance tax, then 15,000 you paid till 15th June. Then you additionally pay 30,000 till 15th September 2022, that's enough. So what will happen? 15 plus 30, 45,000. 45,000 means 1 lakh into 45%, 45,000. So up to 45% of the advance tax, that's enough. Okay, come to the third part. 15th December 2022. Simply 15 December 2022, you should pay at least 75% of the advance tax. How much? At least 75% of the advance tax. That means 1 lakh into 75%. 75,000. But will you pay 75,000 totally now? No. Arey yaar, you already paid 15, 30, 45 totally. So when you already paid 45 and you are required to pay up to 75,000 till 15th December. So how much is left? 30,000 rupees. Okay. 75,000 minus 30,000 will become 45,000. So that much if you pay, 30,000 you pay till 15th December again, that's enough. Okay. And finally, till 15th March 2023, not 22, 23, you should pay 100%. 100% का मतलब total 1 lakh you should pay till 15th March. Okay, total 1 lakh? Yes. Arey already you paid 15,000, then 30, it became 45. Again you paid 30, it became 75,000. Now how much is left? 1 lakh minus 75,000. So 25,000 only. So if you pay this 25,000, that's enough. Okay, till 15th March. So everything if you pay on time, no problem at all. So what we discussed till now, we discussed everything about advance tax. The due dates also we covered. Hey, to whom it is applicable? All assessees, irrespective of your residential status or citizenship. If advance tax liability is more than 10,000 or exactly 10,000, you are required to pay advance tax. How to compute? Take gross total income, from that deduct deductions under chapter 6A. You will get total income. From that you calculate gross tax liability. Rebate deduct under 87A. Rebate is there, that you deduct. Then you add surcharge. After adding surcharge, you get some tax liability. To that tax liability, add health and education cess. You get total tax liability. From that deduct TDS, TCS. You will get advance tax liability. That advance tax liability you have to pay in 4 installments to all assessees. But same advance tax liability for 44AD and 44AE assessee till 15th March you have to pay complete 100% in one shot. That's enough. It's your choice. Till 15th March 2023, if 100% is paid, that's enough. You pay in installments or totality, it's your choice for 44AD, 44ADA assessees. But for others, till 15th June 15%, till 15th September 45% till 15th December, 75% till 15th March 2023, 100% of the advance tax should be paid. So here it is not that percent, it should be added with up to 15%, up to 45%, up to 75%, up to 100%. That's enough. Now come to the notes. First note I said 15th March, if you have paid the any money, any tax till 15th, till 31st March, that is treated as advance tax liability. If you are a senior citizen or super senior citizen, then I said you don't have business income, okay, then no need to pay any advance tax, okay. Now for capital gain income, dividend income, for casual income or first time PGVP incomes, we don't know at the start of the year. So whenever that income accrues, in the next installment you pay respective advance tax. Or if installments are over, then till 31st March 2023, if you pay, that's enough. Okay, very good. Now if you pay till 31st March 2023, then we can say totally your responsibility is over. You are considered to complied with the formalities. Okay, shall we go to the next part? Are you ready? Sometimes how to calculate, what to do, many people are confused. So income tax department said, hey, we'll give you step-by-step guide. Okay, so step-by-step guide, if assessee on his own account is calculating the advance tax and sincerely want to pay advance tax, then how he should pay the first installment. For that, these 6-7 points are there. Same repetition, nothing new. Okay, you have to estimate your gross total income, deductions, then you should calculate total income, all this estimated, right? And when you calculate as an assessee, you should not give this to the income tax department. In simple language, it's your choice. You keep it with yourself. There is no legal compulsion that assessing officer should be given your estimated income. Okay, not required. Tomorrow if case study type of question is asked in exams, they say that assessing officer asked for estimate to the assessee to give the estimate of advance tax liability total income, then is assessee compelled to do so, required to do so? The answer is no, not required. I will calculate my advance tax liability. I will calculate my estimated income. That's enough. Why should I give you? I'll pay on the respective due dates. What's there in it? Who are you to ask? That's what we have to remember. Okay, chalo. We understood compute gross total income, estimated, then deduct deductions, how much you want to invest or spend, then calculate that estimated total income, then you calculate the tax on it, right? Rebate you deduct, surcharge you add, health and education cess you add, right? All these things are done, you get the total tax liability. From that you again deduct TDS, TCS, you get your advance tax liability. And of that advance tax liability, first installment you should pay. Okay. So now these procedures which we are talking about, is it applicable to 44 AD, 44 ADA assessees? The answer is no, because there are no multiple installments for them. Only for those assessees not covered under 44 AD, 44 ADA, these provisions will apply. Okay. Now, so we calculated advance tax and we paid it to the government, the first installments, that's enough. But what about subsequent installment? Second, third, fourth installment. What to do with that? Simple. If there is no change in the estimate, if you feel that whatever you paid is right, whatever calculated right, and there is no significant change what happened in your income, then without any hesitation, pay the second, third, fourth installment according to the due dates. That's it. But if you feel that there is a change in the income. Suddenly you got some capital gain, dividend income, or extra PGBP income, something or the other changed. Your income estimate changed. Then you re-estimate your income, reassess your income, that is estimated income, recalculate the tax liability, deduct the TDS TCS applicable, and finally you will get the advance tax. And what you should do? You should pay advance tax as per the respective installments. So your total advance tax, what you got, the revised advance tax, minus whatever advance tax paid till now, deduct it. And balance advance tax should be paid in the balanced installments. Okay? You did not understand. No problem. I am here to help you. Suppose you are on 1st April 2022, you estimated that your advance tax liability will be 1 lakh rupees. But what happened? You understood after some time, in the month of July, that your advance tax liability comes to 1,50,000. So you would have already paid 1 lakh into 15%, 15,000 till 15th June, correct? Very good. Now I will tell you that now you have a revised advance tax, 1,50,000. Now, what is the next installment? 15th September. Okay. Now, from 1,50,000 total advance tax liability, you deduct this 15,000 paid. How much it comes to? 1,35,000. Okay. This you should pay in September, December and March. But still, you may not get clarity with this. So I'll make it more simple to you. You take 1,50,000 into 45%. How much it will come to? 67,500. Correct? So 67,500, 1,50,000 into 45%. 67,500 will come. Already you paid how much? 15,000. So 67,500 minus 15,000 if you do, you will get 52,500. This you pay till 15th September. Then similar to that, 1,50,000 into 75% you do. Whatever you paid earlier, deduct it and pay the balance. Same way till 15th March also the same. So this way you will recalculate everything and there will be no mistakes at all. Clear? This is how the first installment concept and subsequent installments concept, which I thought I'll share with you. But sometimes what happens is we don't actually pay advance tax. We are reluctant. Everybody want to escape taxes, right? So you are reluctant. In that case, the assessing officer comes into picture. He gives an order that you have to pay advance tax. Come on. Then if he gives the order, you have to follow. But then, if any assessing officer gives order to you, will you just follow like that? The answer is no. Is the order as per the conditions? You have to check. If it is as per the conditions, then you have to follow. If it is failing the conditions, then you can reply to the income tax officer that, sorry sir, this is not as per the conditions, so cannot comply with it. You have all the powers to appeal against the income tax department. Okay, there is an officer called as Commissioner Appeals. You can appeal there. Okay, but what are the conditions? That at least we should know, right? So I am telling you. First condition which you should remember, okay, that the assessee, that means you who got the advance tax notice, your regular assessment should have been done in the past. Because if suppose your regular assessment was not done, then what is the basis assessing officer is asking you to pay tax? He has any divya drushti? Nothing like that, right? So he should have some past data, and for that purpose the law laid down the first condition that your regular assessment should have been done in the past. On the basis of that, the assessing officer should feel or should be of the opinion that you are required to pay advance tax. Assessing officer is of the opinion that you are required to pay the advance tax. Okay, clear? So your regular assessment was done. Assessing officer is of the opinion that you are required to pay advance tax. Then he should give the notice to you, proper notice. That notice must be in writing, right? That notice must be in writing. And in that notice, they should properly write what is your estimated income and what is your advance tax liability which you should pay. Okay, but can assessing officer give you notice after February 2023? देखो, only 1 month left in the previous year, right? So your previous year is 2022-23. Clear? Sir, previous year is 22-23. Now April 22, May, June, July, August, September, October, November, December, January, February. Are 11 months gone. Now what notice? Right? If 1 month is over, then automatically you have to file income tax return on self-assessment basis. So government said that assessing officer should give any notice till the end of February month only, not afterwards. Okay. So I discussed 4-5 points relating to conditions of assessment assessing officer which should be complied with. First condition was your regular assessment should have been done. Second point is opinion of the assessing officer, you are required to pay advance tax. The notice should be given, but it should not be given after February end. It should be in writing. Notice should be in writing and should tell you how much is the amount of advance tax you should pay. Now, that amount which I am discussing now cannot be any random number what assessing officer feels, because what you are going to do in the current year, how much you are going to earn in the current year, he will not get any dream to understand, or he cannot time travel and check in future. So he should rely on the basis of data. And from where the assessing officer will get data? From the regular assessment done in the past, or your income tax returns whose assessment is not complete till now. Okay, either of these two informations he should check, and out of that higher value can be considered by the assessing officer, your regular assessment related income and advance tax liability, or your latest income tax return to which regular assessment is not yet complete. Out of that, whatever advance tax liability is higher, that assessing officer can ask you to pay. Okay, this becomes a reasonable basis, right? Because it is backed by data. Now you are clear with what I said, how assessing officer will estimate, calculate, what are your legal rights also I discussed beyond the textbooks. Correct. Now what action you can take? What should be the assessee's response? Because ultimately it is assessee who has to pay tax, correct? If the notice, the order of assessing officer is right, his tax liability, whatever he calculated, advance tax expectations, whatever he demands, that is right, then you pay that. And if you are paying the same, then no need to intimate to the assessing officer separately, correct? अब देखो, you are following his orders, तो फिर जाके साहब साहब I am following your orders, not required. साबजी साबजी नहीं करने का, ठीक है. You are following the orders, right? Suppose you are showing more income than what assessing officer asked you to show. He said that your advance tax liability comes to 3 lakhs rupees. You calculated and said, "Arey yaar, you don't know anything. It is 5 lakhs rupees and I am paying tax as per 5 lakhs." Then assessing officer will be very happy, right? So you pay tax as per your estimate, which is higher than assessing officer's estimate. Then also you need not give any notice to the assessing officer. But most of the cases we find the third case. Oh, how can you show this much income? I'm not earning this much income. It is unfair on me. My estimated income is less. My estimated tax is less. If you feel like that, then the third column is for you, right? You pay tax as per your estimate only, right? No need to fight. But same thing you intimate in form number 28A to the assessing officer. Okay, yaar, he feels your income is 3 lakhs rupees, your advance tax liability is 3 lakhs, you feel it is 1 lakh only, no problem. But declare every information in form 28A to the assessing officer and pay advance tax as per your estimate, not as per his. Okay, clear? Clear? Koi doubt? No doubt, right? Very good. Now shall I come to the next portion? If you are okay, I'll continue. The point talks about certain things like 234A, 234B, 234C, 234F, all these we'll discuss now, right? Okay. What is 234A? Before that, small point, if any tax is paid till 31st March of the previous year, assume it to be as advance tax only. Assume it to be advance tax only. Okay. Now come to 234A. If there is a delayed filing of income tax return, then 234A applies. If the income tax return is not filed at all, there are two things I said: delayed filing of income tax returns, or second one is returns is not at all filed. Then 234A section applies. Which section applies? 234A section applies. It talks about SI. I was shocked for a second. What is SI? It is not sub-inspector, it is simple interest. SI means simple interest. So in the notes you write down somewhere, because I was able to recollect, but sometimes you may not. So write down it is simple interest. So simple interest at the rate 1% per month or part of the month will be charged. Suppose you delay for a single day also, 1% interest. 15 days delay, 1% interest. 1 month delay, 1% interest. That means either for the full month or for the part of the month, 1% interest will be paid, okay, to the income tax department. Now, suppose you are a delayed person, you filed the income tax return but late. Suppose you are an individual, you should file the income tax returns till 31st July, but you filed it on 31st August 2023. How much delay? Only 1 month, correct? So you check the dates and see how many months difference is there. How much is your tax liability? Into 1%. Suppose if it is 3 months, suppose you did not pay on 31st August, you paid on 31st October. So from July, August, September, October. August, September, October. 3 months delay. So 1% into 3 months. Tax liability into 1% into 3 months. Suppose you paid in December month. Then August, September, October, November, December. Into 5 months. Simple as that you have to pay. But there are some people who don't even file income tax returns. Somebody is delayed, you can calculate. right? When you should have actually filed, when you actually filed. So this difference you can check and you apply the interest. That's easy. But somebody who did not file income tax return at all, for them what to do? If you don't file income tax return, then the income tax assessing officer will do best judgment assessment under section 144. That means they will take all the information what they want and they will calculate your tax liability and they will only ask you to file the return and pay tax accordingly. If you don't pay, they will sell your property and recover the tax. This is what their powers are, right? So under 144, assessing officer will do best judgment assessment. Now, when that assessment is done, you should see that date. And what was your actual due date? Your due date was July 31st. Best judgment assessment was done after 1.5 years. So for this whole 1.5 year, that means 18 months, you have to pay what? Tax liability into 1% into 18 months. This much interest. Clear? Yeah. So this way you should be able to interpret the provisions. How much delay happened, that much interest. So what is better? Pay taxes on time. File returns on time. These are two different things. Paying tax includes TDS, TCS, advance tax. Filing returns is declaration of all that, your income and your tax. Okay, everything should be done on time so that you save yourself from some penalties, interest and fees also, right? If you don't file the income tax return on time, 234A interest you paid till now. Now you see the next page, there is a 234F section also. Because you did not file the income tax return on time, under 234F, you have to pay how much? 5,000 rupees flat fees. How much fees? 5,000 rupees flat fees. Okay. Are you ready for paying so much? So better file on time. Second thing, if your income is less than 1 lakh rupees, I am talking about only 234F now. 234B and C will discuss, don't worry. Okay. 234F I am talking about. You have to pay flat fees of 5,000 rupees. Clear? Very good. Now what they said, second point, if your income is less than 5 lakhs rupees, your income is up to 5 lakhs rupees, then you cannot be asked to pay so much fees, right? 5,000. So they said if your income is up to 5 lakhs rupees, flat 1,000 rupees fees you pay, that's enough under 234F. So suppose your income is 4 lakhs. How much fees you will pay? 1,000 rupees. If your income is 8 lakhs, 1 crore, 10 crores, 100 crores, lakh crores, flat 5,000 rupees fees under section 234F. This you should remember. Now if you feel that only interest, only fees, sorry boss, there are penalties under 270 section which we'll discuss in the final syllabus, not in inter, but CMA final syllabus we'll discuss. Okay. Now, just one thing I forgot to tell under 234F, that if you don't file the returns till 31st December of the assessment year, actually 31st December 2023 I am talking about. So till 31st December 2023, if you file income tax return, then you will pay fees of 5,000 rupees. If your income is more than 5 lakhs, less than 5 lakhs, only 1,000 rupees. But if you don't file the income tax return till 31st December 2023 or 31st December of the assessment year, then what will happen? The worst thing will happen. You cannot file income tax return. You cannot file income tax return at all. That we'll discuss in return and PAN chapter. Okay. So you lose the right to file income tax return. So such pathetic situation you should not fall into. That's what I feel. Now coming back to our advance tax related interest portion. 234B, 234C also we'll discuss. Okay. What is 234B? Suppose I was telling in note 1 that whatever tax paid till 31st March, whatever tax paid till 31st March 2023, till the end of the previous year, that all will be called as advance tax liability. That all will be called as advance tax liability. Clear to all of you? Yeah. But if this advance tax you did not pay till 31st March also, then from 1st April 234B section will apply. Which section will apply? 234B. Now, the 234B section will start from 1st April and it will apply till you pay the tax. Suppose you paid the advance tax, right, till suppose on 31st May. Then how much? April and May, 2 months delay. So 2% interest will apply. Simple. Advance tax liability into 1% per month into 2 months. Like that we'll calculate under 234B. But for calculating 234B, you will take total advance tax minus advance tax paid till 31st March of the assessment year, 31st March of the previous year, that is 31st March 2023. Balance amount is there, na? On that you will apply 1% interest for the number of months of delay. For each month 1%. Part of the month 1%. 3 months delay 1% into 3 months. 5 months delay 1% into 5 months. Under section 234B. Okay. One thing I have to share with you. Suppose if you have already paid 90% of the advance tax. If you have already paid how much? 90% of the advance tax. Then government says, अरे यार छोड़ दो यार इसको माफ करो सीधा साधा आदमी है राइट इज अ वेरी सिंसियर पर्सन 90% ही पेड अरे 10% नहीं आया तो क्या पनिश करोगे इसको नो नीड टू पनिश सो दैट्स व्हाई 234B will not apply if you have already paid 90% of the advance tax till 31st March 2023 in the previous year. If you have paid 90% of advance tax, then 234B section doesn't apply. So clear about 234B? Okay. Now come to 234C. What is 234C? 234C for presumptive taxation is different and for others it is different. Okay. So if you are an SSC covered under 44AD, 44AE, then 234C is different. It says that whatever the due date of advance tax, 15th March only na, only one installments, right? If you delay, 1% interest will apply. Okay. So if you paid on 16th March also, 20th March also, 25th March, 30th March, 31st March also, 1% interest you should pay. Only under 234C, this 1% interest will apply. If you don't pay in April, May, June, then 234B will apply. 234A's coverage, 234C coverage is till the end of previous year only. So 234C will apply till the end of previous year only. Our previous year is 22-23. So 234C will apply only till 31st March 2023. Any delay till 31st March, interest under 234C. Beyond that, there is a delay in payment of advance tax, 234B. If even after filing returns, uh, uh, after due date of filing returns there is a delay, then 234B will also apply and 234A will also apply. Okay, so if there is a delay in filing income tax return, because advance tax is anyhow not paid, so 234B will apply. And second thing, return is not filed, so 234A will also apply. Okay, very good. Now come to 234C. So what is the coverage of 234C? Only from 1st April 2022 till 31st March 2023, in the previous year only. So those assessees who are covered under 44A, DA, DA, for them 15th March is the due date. If they default in that, then simply 1% interest charge. Nothing to worry more than this, you don't think. For all other assessees, there are 4 due dates, right? 15%. Are you able to remember? Till 15th June, 15%. 15th September, 45%. 15th December, 75%. 15th March, up to 100%. These are the due dates, yes or no? So if you don't pay till any of the due dates, default in any of the dates, then if you pay, suppose example, I'll tell you in very simple language, because little different than all these things. Like A, B are different. C in installment case is totally different. So concentrate and listen. Suppose 1 lakh is your total advance tax liability for previous year 2022-23. So in that 1 lakh, till 15th June, you should pay how much? You should pay 15%, 15,000 rupees. But did you pay? You did not pay. So what the government believes, that you did delay for 3 months. That means you paid in the next quarter, they will bill you. You paid in the next quarter. So they simply say it is 1% interest per month. But the belief is you paid in the next quarter. So 1% into 3 months. So suppose 15,000 into 1%, how much? 1500. अरे वो तो 10% है भाई, 150 rupees. 15,000 into 1% is 150 rupees into 3 months. So 450 rupees you have to pay the interest under 234C. So never ever get confused with this. Okay. So this is what they said. If you did not pay 15%, but you paid in around 15%, you paid at least 12,000 or more, 12% or more, up to 15% you paid, then slight difference is okay yaar in the estimate. So no interest will be charged. Till 15th September, you should have paid at least 45%. But you paid up to 36%. So if you paid 36, 38, 40%, right? In between 36 to 45, government says, "Arey, no problem." Right? But if you paid only 25%, then you have to pay interest under 234C. So whatever advance tax liability, whatever is your liability as per the percentage minus what you paid, right? On that 1% per month generally applicable for quarter. This is how you should calculate. So this is what the whole chapter of advance tax which I covered for all of you. I feel you understood, you enjoyed everything. Okay, we'll meet in the next lecture. Till then, take care. Bye bye everybody.